Hello, everybody. Welcome back to the Entrepreneur Hour, where I help entrepreneurs and investors profit more through innovation. And in my ever growing quest to create multiple revenue streams, I'm hoping you take the ride with me and we figure out together how to create financial freedom for both of us. So today, what I'm thinking about doing is I'm going to start looking at equity crowdfunding deals on equity crowdfunding websites, right? The reason why is because one of the revenue streams I've been working on for a very long time, not even really fully understanding how it worked myself, is in the technology startup game, right? So part of it took me a very long time to understand. It really only took me to put myself in an investor's shoes before I fully really understood the opportunity of technology startups. So I came at it as, hey, come up with the right idea, you could be a billionaire, right? So let's just try to put a bunch of ideas out there and see what happens. But once Metabronx partnered with Village Capital and they trained me to be an investor or think like an investor to help startups, that's when I really started to say, oh, all right, I get it now. I get how the other side works. So now it helps me to create things that work more because now I get what investors are looking for. Versus with me, I just thought if something hits and a lot of people use it, it will make money, right? That's how I originally started in this business because I know how to create things, but I just had to find the right thing that a lot of people wanted to use. So once I started to do that, and I realized, wait a minute, it's really hard to raise money for these ideas. I started to build a nonprofit called Metabronx to help startups raise money, right? And we were able to start learning how to do that. And one of our startups raised $1 million pretty early on, and we were like, all right, we know what we're doing. And then it really, we didn't know what we were doing back then. We thought we did. We knew more than most, though, right? Which is a big thing. A lot of times you think you don't know things, but if you know a little bit more than others, you know enough to teach people, right? So we knew a little bit more because we knew how to build things and we knew how to make products that worked. Which, if you're trying to come up with an idea, you need people that know how to make things that work. So we played that role in the beginning. And my company still does that to this day, right? But what Metabronx really was trying to do was try to connect people to funding. But then this law changed, this Jobs Act law that Obama passed in about 2012, where he changed the law where anyone could invest in startups now. So the equity crowdfund portals started to become a thing. Websites started to pop up where you could put your ideas on an equity crowdfunding platform and raise money for them. So now I take all this experience and now I want to look at equity crowdfunding deals and tell you what I think and how I think about them so you can start to understand how to do your own due diligence for a startup that you may want to invest in, because I do believe this is going to be one of the best ways to change the economic trajectory of diverse communities. Why is that? Because right now we don't really get the investment. If you look at the overall venture capital investment, it doesn't go a lot to minorities, right? I think it's like less than 10% or something like that goes to minority founders. And minority founders have to have good ideas. There's no way, law of averages, that they don't have good ideas. They're just not getting the funding or the support, right? So as minorities or anyone watching, if you see an idea knowing it's good, but they just don't take the traditional route, you can get in there earlier than even a venture capitalist can. And if the idea is good, you can make a lot of money. So that's where what I plan on doing today is I'm going to start looking at these equity crowdfunding sites and start to show you how I look at deals, right? Like, and start to show you how the Village Capital partnership has started to teach me how to look at things like an investor. Okay. So first website we're going to go to is Republic, because it was the first website I knew about as a person involved in this technology startup game. Republic was the first one that I think they did one of the best jobs of marketing. So everybody was able to see what they did. So okay, we're on the website republic.co, and you can see there's invest, raise, about. So if you don't know what Republic is, let's just go to about so you can understand. Um, for the first time in history, the majority of the U.S. population can invest in tech startups. So this is exactly what I was just saying. This first time in history. So things, when you hear first time in history, you should really pay attention. Invest too. First time in history, invest. Those two words usually mean somebody's about to make a lot of money, and most of the time it's not us, right? So start there, right? All right, here it is. In May 2016, the United States Security SEC enacted the title Jobs Act. All right, so it wasn't 2012. I think they were talking about it in 2012, and maybe it went into um, full swing in 2016. The majority of the U.S. population to invest in startups for the very first time, but the complicated legal requirement called for the founders an investor-friendly platform to make startup investing truly accessible. So they needed to create websites because, of course, you can have these opportunities, but how can you engage in them if there's no place for you to look? So they needed to give companies the ability to make websites, but not anybody could do it. You had to go through a whole platform because this is SEC. This is like the same people that govern the stock market, right? So you can't just do things that are outside of the law. And what they had to do is make sure there's websites that people have to go through to make sure they're doing this within the laws that America has put so we can do this. So Republic, like I said, they did a very good job of advertising, right? So I knew about them. They have a great board, great people. You know, you'll see them in a lot of places. And this was the first place I really started to understand this. So why invest? Why become a startup investor? Angel investing, hunting for a unicorn, was previously only available to the wealthiest 3%. So if you've watched my content before, I said it's for the 1%. I guess they did their research for the 3%. Big difference. But with Republic, everyone can invest in a private startup for the chance to earn a return, right? So this is where I'm talking about. Like, if you watched my show yesterday or anytime before, you hear me say things like, if you would have invested $1,000 10 years ago in Amazon, you would have $1 million today. There's things like that, right? So in equity crowdfunding platforms, what you're doing is there's a range, right, of an idea's life cycle. The idea, when you get it in the shower and you're like, wow, this could be $1 billion idea, until you are doing that idea, making hundreds of millions of dollars, there's a lot that goes in between that, right? So Republic gets the ideas a little bit closer to the shower than the public stock market, right? So the earlier you invest in an idea, the more your return is. So think about the Amazon thing I was telling you. If you gave $1,000 to Amazon 10 years ago, you have $1 million. Maybe it was 15, I don't know, 20, I don't know. Something, right? Something like that. I'll find out the exact stat. Because you invested early and you gave the 1,000, the value of it grew so much that 1,000 became worth $1 million, right? So the earlier, there's people that invested when Bezos thought about it and he was driving cross country with his wife, writing the business plan to meet investors, right? Those people, and they didn't give $1,000. They probably gave hundreds of thousands of dollars to Bezos. And imagine if, as a person who invested, once it reached IPO, which means it's on the end of that life cycle of a business value growing, it went from 1,000 to 1 million. Imagine what those guys that invested early made. They must have made billions. And what happens, like it says here, only 3%, so those are really the top richest people, put money in things like Amazon and made billions. But now we get to do that. So what I want to start doing is I want to start showing you how to look at an investment, right? At an equity crowdfunding investment. All right, so let's see how it works. It's always good to understand how it works. How it works. Republic allows anyone to invest in a vetted private startup. Republic is one of the companies that do this. There's only about 30 companies that have the license to do equity crowdfunding right now, right? Republic is one of them. Republic, though, I've had conversations with people from there, and you know what? I should get somebody on the show from Republic. I'm going to do that. I'm going to reach out. But Republic is highly selective. Less than 3% of startups that apply pass through our due diligence and investment committee. That is where Republic stands out, right? Like they basically have a very, very selective process of where you can become a startup that's listed on their website. Why is that? Because they want to make sure the startups that are listed are vetted for you, right? So like right now I'm about to show you how to vet a startup, but the reason you would want to use a Republic is because they're vetting it for you. They're saying we're not accepting everyone. Other platforms will accept more people, and you have to do your own vetting, right? You still got to do vetting here too, though. No, everywhere you got to do vetting. But hold on, let me make sure my mic is the proper mic. Yep. All right. Cool. Okay. So, free for investors. So, I think that's pretty common throughout all the equity crowdfunding platforms. Free for investors, meaning they don't charge you to see these deals. There are networks where you pay to be a part of this network, and then you get what they call deal flow. So they show you deals. You pay to have access to deals. That's not the case here. And no equity crowdfunding site does that. Mission driven. We launched to level the playing field for entrepreneurs and investors, right? Entrepreneur Hour, help entrepreneurs and investors profit more through innovation. Equity crowdfunding is probably one of the biggest innovations to come along for entrepreneurs and investors ever. Look what it's saying. Now most of the U.S. population and the world, actually, people from anywhere in the world can invest in your startup for as little as, if you look on this website, Republic, I think, will take as little as $10. Yeah, look at that. Invest as little as $10 in private startups. So think about that. Yesterday I spoke about going to the Dominican Republic and seeing lotto stores everywhere, on every corner. So imagine instead of putting $10 in a lotto, you put $10 in a startup. Your odds of winning are much better putting $10 in a startup that has been vetted by these websites. So all right, let's see what else we see here. Okay, so the cool thing about Republic too is Republic allows you to invest in multiple types of investments. So if you look here, they got video game investing, real estate investing, and they do this thing called autopilot, which I thought was super interesting. So autopilot automatically builds a diversified portfolio. So what you do is you tell Republic how much you want to invest every month, and they will, through automation, start investing it to diversify your portfolio based on the projects on their platform, which have been vetted by them. So in a way, you are getting some type of professional lens on the investments that you make. And this, I see this as a more risky investment, as a real estate investment per se. And that's how it works, right? There's definitely levels of investment risk, right? Of course. One of them is investing in an idea earlier, right? Any idea. Right now, you can have an idea to do anything. If somebody invests in you early, they've taken the most risk, so they deserve one of the biggest rewards. But when you think about asset classes, right? So an asset class is something like a piece of real estate, right? A building, a house. That is one of the safest investment asset classes, but it's also one of the slowest growing in value, right? Because a building is not going to grow from $1,000 to $1,000,000 in 15 years. That's I don't know if that's ever happened in history of the world, right? But a startup can. But it's riskier, right? More risk, more reward. So when I look at stuff like this, I think it's really smart. And if you look at your overall investment capital, what I've been researching, and I still don't know how I would do this right now, I'm figuring it out, but there's safe investment and there's risky investment. And how much do you want to spend on safe investment versus risky investment? What they say is the younger you are, the more you can spend on risky things, because with enough money in risky things, you could really make, like, let's say you took 50% of your money and put it in risky things, and one of those things hits, you'll make ridiculous amount of money, way more than your 50% that's safe. So that's where I see this, and I could say, all right, maybe this is an investment idea that makes sense, right? Because I had this conversation with a friend of mine the other day. We were talking about life insurance, right? And we were talking about how in communities of color, life insurance is not a thing that families do. But in wealthy communities, it is. Because, and what happens is when people pass away, instead of in communities like I come from, people having to do GoFundMes to bury people, in wealthy communities, that family just gets a ton of money off the life insurance. But in communities of colors, we don't normally do that. So my friend who is Hispanic, he was doing it for his family, and we were talking about it because he was using the guy I use. And I was just catching up on how he had his right now, because we both did something called term life insurance, which is a certain amount of time you spend money every month to have insurance. But once you end that term, you have to re-up and do another term, or do something where you save money. It's like an investment that you're kind of putting money away and they'll grow it for you. And then if you pass away, your family gets that. But you could also borrow from that money too. So it's like a thing that you have to think about. Do you put money into a life insurance that's a term that you're not going to get anything other than you make your payments, and after 10 years or 20 years, whatever you decide the term is, your insurance is over. And if you stop making a payment, let's say you stop making a payment in year 6, you lose it, right? But with the other one, if you stop making a payment in year 6, you still have that money you accumulated. But what we were talking about is you can find other things to invest your money in that may make you more money than putting it in a life insurance policy that's a savings life insurance. So I think about something like this and say, oh, hey, all right, let's say I was going to do a savings life insurance, and I was going to put, because some of these life insurances policies like that, it could be $1,000 a month that you're putting away for your life insurance, but then you can borrow against it, and when you pass away, your family gets it. So if you think about it, if you're putting $1,000 a month away for 10 years and it's growing through compound interest, that could turn into a lot of money. So I think about stuff like this, and I think maybe this could be another route that can make probably more money, but not as safe, right? So autopilot is pretty cool, hands-free, 100% free, lower minimums, never miss a deal. So they basically put your money into deals that they believe are good based on whatever AI investment thing they're thinking of. So, okay, let's go into video games, because I myself I'm making a video game right now, right? I don't know if I will put it on equity crowdfund. I doubt it, but I would like to see how this works. Okay, video game investing is here. Invest to earn returns on game sales or back games to get exclusive rewards. So that's interesting, because I didn't even know that that in equity crowdfunding you could do rewards and equity. I thought you could only do one of the two. So that's pretty interesting. All right, so announcing Fig joins Republic. Fig, the leading publishing platform that offers video game investments, becomes part of Republic family and brings game investing to the masses. That's pretty interesting. Okay, so if you look here, we'll start to look at how you vet an possible tech investment. All right, so let's go into the first one. So I'm gonna pull up a link that I will link you to. I'm updating this website, so it's probably gonna change. But right now, I'm gonna show you the Village Capital breakdown of how investors look at startups. So let's start out with Amico. So look at this. Pre-orders open. They've already raised $6 million. Their goal was $1, which is hilarious. So basically, they were any amount of money would help the company. Basically, when you do that, it's because you're saying, if I can make $1, I make $10, make $10,000, that'll work. They made $6 million. Okay, so I don't know if I'm gonna play the video because I'm not sure how that'll play. But let's see. Okay. At Intellivision, our mission is to use technology to bring family and friends back together by delivering simple, affordable, family-focused entertainment to everyone. All right, one quick thing you look at first normally when you look at one of these equity crowdfunding things is what are they giving you, right? So register to invest. This means register with Republic. Or Fig, maybe. I'm not sure. All right. So what do you get? For $100, you get a refundable deposit towards your $279 VIP edition vintage wood grain, I guess, system. I guess you're buying a system. So this seems not like equity crowdfunding in this one. So if you don't understand what the difference between equity crowdfunding and regular crowdfunding, here it is. Equity crowdfunding means, regular crowdfunding means rewards. So you buy the product before it exists. So you're basically supporting the company to make it happen before they can do it because you're being the initial investor by buying the product before it exists, right? So I believe this is what this is. I'm not sure though. Yeah, that's what it looks like. So, okay, you get all right, yeah. For $100, you're basically giving a deposit on the system. You'll get 2 controllers, 6 games, 25 RFID golden ticket cards, autograph exclusive. So, and this is saying it's going to deliver in the second quarter of 2021. So, you're basically buying a system. Here's the wood grain thing, like I said. So it depends. So you're giving $100 to one of the systems. So this is not equity crowdfunding. This seems like regular crowdfunding. It's a game system. You can look at it, think about it. If you think it's going to hit or not, and buy it before. Because this is not really an investment. This is it is an investment, but it's not an equity investment. So you're not going to make money on it. You're supporting the company by giving it money for the product. So you're gonna pay less than when it comes out without being on these platforms. It's gonna be more money. So you're gonna buy the product early. All right. So I don't know about that one. I don't know if I would. A unique game system. So okay, let's do this one. I think this is an actual game. So look at this game. Arcadium Rise of a Khan. They raised $75,000. What are you? See roadmap. Milestone 1. Dynamic World Hazards 10,000 achieved. Battle Challenges 20,000 achieved. Fully procedural maps 30,000 perceived. So I guess you are funding this project, but because the money's already raised, I guess it doesn't tell you what you would get for giving the money. So again, this one is probably not good to look at. Let's try this, Frozen Flame. Okay, it looks like this one is still in progress. Okay. So again, this doesn't look like equity. It's again, you're just buying the game early. So you're going to get it for cheaper. You're going to get a bunch of perks. All right, so maybe the game thing is not equity crowdfunding. I'm going to check really quickly through all of them. All right, here it is. This one is. So if you invest in Hero Live, they have a... All right, so this is where we start going into what I was talking about. First thing they say, valuation. See right here, it says valuation. Let me make the video bigger just in case. So valuation, $12.5 million. The maximum valuation of which your investment converts into equity shares or cash. So basically, but you're getting a 20% discount. So look, you could give $100. So basically what happens is you buy a certain amount of shares when you give $100. Just like right now, you give $100 to Apple, Microsoft, or Tesla, right? Here, you're buying the company before it even exists. So imagine if Elon Musk said, hey, I'm about to make these flying cars and self-driving cars, but I don't have any money. If you give me $100 right now, that $100 could be worth millions one day, right? You got to believe in Elon Musk and give him that $100. I know from my own perspective, I invested in Tesla last year and the money doubled. That was in 1 year, right? Imagine the people, again, that invested early, right? So, you know, it is luck, but you're betting on the horse, right? That's a big part of investing, right? So look at, on this chart, I'm going to zoom in. On the investment chart, the first thing on the chart, and I don't know if you can see this, I'm going to try to zoom in, is the founding team. The team is one of the most important things for a startup. So you want to look at the team, right? And based on the team, I'm going to tell you what I believe this company is as an investor, right? Okay, so let's look to see if they talk about the hero team. Solution, traction, customers, business model, market, competition, vision, investors, founders. All right, here it is. Edward Lerner. He wrote EA's first hit 3D game. All right, so that puts him as a, okay, I think this guy knows what he's doing, right? His startup his startups include Looking Glass, so he has experience with startups. He worked for John Madden Football and The Sims as a CTO, so he knows technology. At Sony, he was director of engineering on PS4. This guy is a rock star in the gaming industry, right? Then we got the other founder, which is Dwight Kwok. He's a GM of Greater China. So basically that makes me think they are targeting China with this game, which China has huge numbers. So it should do well. Where he was responsible for monetization, huge media and entertainment properties, right? In China, which talking about billions of dollars. So if you look at the team, right? 2 founders. Most startups, most investors don't like investing in companies that have less than 2 founders. So if you look here on the chart, we have 2+ co-founders with differentiated skill sets. we're seeing here, that's what they have, right? Two founders, differentiating skill sets. And this is Edward and this is Ned, so it's another guy. So it's just, there's three founders, so that's even better. Unless Ned and Edward are the same thing, I don't know. But either way, so check. We have two founders here, so they're number one. Our team has personally experienced the problem. I would say the problem that they're trying to solve, which is the next question. What is the problem and vision? We've identified a specific, important, and large problem. Let's see what the problem is they're solving. Problem. An epidemic of loneliness. We all need human connection. We used to call our friends. Now we text or post, and our phone is full of junk calls. TVs used to be our electronic fireplaces. We gather around, talk, and watch. Now we watch apart, each on our own screen. Okay, so that's the problem. Our connection devices are disconnecting us, except games. Right? So solution. So again, if you look here, what's the problem and your vision for solving it? So here is their vision for solving it. Make watching as social as playing. Gamers have figured out how to connect. They put on headsets and talk and play games like Call of Duty, League of Legends, and every esports game. But even the 2 billion gamers aren't always gaming. How do we connect with our friends when we are not playing together? So it looks like they're basically saying that they have an idea to solve the loneliness problem of how we interact now versus how we did before. All right, so, and their vision for it is this product. Transforming watching from solo to multiplayer. So, okay, pick what you want to watch. So I guess you watch stuff. Pick who you want to watch with. In seconds, you're talking and watching together. So I guess you hear the person and the audio? Let's see. I guess I'll play the video. Let's see.
Teens spend endless hours isolated by media. Hero is a revolution, changing media into a powerful social experience. Hi, I'm Ned Lerner. I worked on John Madden Football and The Sims. At Sony, I was Director of Engineering on the PlayStation 4. Hero is my 5th startup. My last startup invented Talk and Play. This live vocal connection made playing social. Hero invented Talk and Watch to make watching media as social as playing. Like any smart TV, pick what you want to watch. Then who you want to watch with. Send the magic link to your friends or a million fans. And in seconds, you're talking and watching together, transforming watching from solo to multiplayer. It looks like this.
$5 says stop time.
Okay, you're on.
We layer your friends' avatars and voices over synchronized broadcast quality video. Each group of friends has its own VIP box for easy conversation. Our patented crowd mixer adds up all the boxes so you can hear the crowd buzz, laugh, and cheer, adding excitement and valuable data for machine or human learning. If the media is behind a paywall, viewers must enter their credentials once, like a smart TV. Drop the Hero Embed or Party button into your website.
Little bubble.
Instantly, it becomes the place your community can gather, talk, and party together. Hero transforms one-way media into a powerful social experience.
So, I kind of think that idea is pretty good, right? So what you saw there was, it's kind of like sitting next to your friends while watching the game, right? You guys are talking. It was a little bit hard to hear sometimes because when you hear a lot of noise, it's hard to understand who to listen to. So that's one thing I would say this product, may have trouble with. But I like the idea of, if they figure this out, I do believe this is the future of how things are going to work. Think about COVID. Think about what you just went through, right? I think about this for my kids. My kids don't have a lot of interaction with outside friends. Luckily, there's 3 of them and they get to do that together, but mostly what they do is fight. So I do think that what these guys are trying to do is pretty smart. I like the idea, and it seemed like it worked well. So let's see if you look at the chart where they come up. So right now, our team can build the product and understand the value chain. So yes, they've built. You saw it. It's built. I mean, that could have just been an animation though. We got to check to see if it's actually built. All right, so the problem and vision. We've identified a specific, important, and large problem. Yes, they have. We have a vision for how to solve it and can execute on it. It looks like they can. We definitely have to check to see if this thing is in the App Store or something. Maybe it's early though. Actually, you know how we can find that out? Through the investment. So right now, let's see where they are. They've already invested 300,000. I mean, the crowd has invested 300,000. You still have 33 days from the time of this recording to invest in this. You can invest as little as 100 if you think it's a good idea. Funding goal, they're trying to raise up to $1 million at a 12 million valuation. So what that means is they're willing to give away about less than 10% of their company to the crowd, right? For if you give them $1 million, they'll give you less than 10% of the company. The past venture capitalists would give them that $1 million and take more than 10% of the company. That's why it's such a huge opportunity to look at equity crowdfunding, because now they can get the deal they want. It's like retail versus wholesale, right? And I had in another interview I had with the CEO of one of these platforms, he broke it down pretty smartly. He basically said venture capital is wholesale, equity crowdfunding is retail. So as a company, you are able to set a higher amount to get investors in than if you go to venture capitalists. They can tell you, hey, we're going to give you $1 million, but only if you give us 20% of your company. And you have to make that decision, like, do I turn down this $1 million, or do I just take it and just hope I don't hurt my future by giving up too much percentage of the company? So with equity crowdfunding, they're able to set their valuation to 12.5 million, and you get to decide as an investor right now, is $100, is $12.5 million a good valuation? So how do you do that? Valuations are very subjective, right? Valuation means how much is the company worth, right? Because right now, let's say, I'm going to take you through the chart, because one thing I immediately think of is who would acquire this, right? And why do I think that? Is because I've been trained to think like an investor. Because the last chart here says investor exit. So what that means for you is, if I give $100, when do I get my money back, right? And with the interest. So this is a crowd safe. So a safe note, this is a little technical, but a safe note is basically you saying, look, I'm willing to buy a certain amount of stock at this price. I mean, a certain amount of stock, but the price is not set yet. Here they're saying they're gonna give you that stock once they get to the 12.5 million. They're gonna convert your stock. So whatever amount your let's say I give $1,000, and at 12.5 million, however many shares divided by that 1,000 is how much you'll get, right? You're getting shares that only grow in value. You're not going to make money off of them until you sell them. So like I said, it's just like the stock market, right? You don't, unless it's dividend payout. But companies like this are not going to be dividend payout because they need the money to grow. Just like Amazon. Amazon wasn't profitable for 20 years. They weren't paying dividends. I actually don't even know if they pay dividends now. I got to check that. Well, I do have them. I haven't seen a dividend payout by them yet. So what you're saying here, when you see crowd safe, it means you are putting in money in the stock and you are hoping that that money, that stock value grows. So that's what's happening here. These are documents of everything. You can see all the official filings because see, SEC, this stuff you don't play around. This is like you go to jail if you do wrong things with this stuff. Like Martha Stewart, right? Stuff like that. All right. So bonus perks. If you invest $250, you get the $250 in the safe note, and then priority acceptance in Hero Live beta test. So now you will get the product first once they release it as well. If you invest the $250, if you invest $500, you get $500 worth of safe note shares. You get priority in the beta, and your name is on our investor page. That's pretty cool. If you invest $2,200, you get the same things. You get an invitation to participate in Hero Live online investor event with our founding team. So you get to talk to the team. You get $250 of live venue as a service credit. See, this is interesting because I thought you couldn't do reward and equity. I'm going to have a conversation with a few people about this because I was told you can't do this. 10,000, you get a hat. You get all the same things plus the credit and a hat. 25,000, you get more venue credit. I guess what this is for is, let's say I guess you use it as a business and you have a venue. I guess that's a revenue stream for the venue. Let's look at venue. Yeah, okay, venue. Talk and watch together like you're in a VIP box at a venue. Sign 10 partners to our virtual venue focused on esports. Got it. So this is a smart move, right? What they're doing is they're trying to get the esports leagues to partner with them early. So if you are an esports league and you believe in this, you'll give them $25,000 knowing you're going to spend the $10,000 on your venue. So now you're getting the $10,000 credit to use this product, plus you own $25,000 worth of equity. So what does that do for you? If this actually works out and it becomes huge, your game is going to be played on it, growing in value, and the startup is going to grow in value. So your money is just growing in every way. Your money from the game investment and your money from this investment in this startup. So that's pretty smart. I think that's smart. So you go all the way up to 100,000. You get 50,000 great credits and participation rights. I don't know what that means. I guess I gotta look that up. So when I look at this startup, if I go through the Village Capital chart, and I'll link you to it, I understand the problem and vision. We have we can execute it. We can articulate. Let me make this bigger because I know this is hard to see. So we can articulate our vision and superior proposition. I always say yes to that. We can explain how our solution will transform the industry. I see that they have the video. They explained it. Of course, you want to go deeper. I'm going quick with the due diligence, but this is what I have to do for startups, for investors. I do this for investors. I do this for our nonprofit. And then we come up with a number. And then that number, we tell the startup, hey, you may believe you are this number on this chart, but we believe you're this number on the chart. Prove us wrong, right? And I'm going to start doing this with startups as well, one-on-one. But right now, I only do it for people that pay me and the nonprofit. So when you think about this company, on this chart, I would say they're pretty high. We have a clear strategy and understanding of sales. I can see that they do just on their reward system of how they're going to pay people that invest, that they have a plan on how to get sales. Our management, product, and sales teams are ready for growth. I don't know that for a fact, but the fact that they have the guy Kwok, I think they may, right? So this chart, I mean, I don't want to go all the way into it because I want to look at a little bit more deals, but this chart is how you can vet a deal. You can look at this chart, look at the deal, and see what you think. And this is how you start to become what they call sophisticated investor. This is what you want to do before you invest money in an idea. You don't want to just put money into something and hope. You want to do your research, right? So I'm showing you the way investors unconsciously do this, though. They don't have this chart. This chart was created by Village Capital based on understanding investors. And then they trained me as a nonprofit that deals with startups to look at it, right? So if you look at this startup, I can see, I would say I would put money in this. I'm not saying how much. I think it's worth a gamble. It's like playing lotto, but with much better odds, right? I think, I wouldn't say how much I would put, but I think I would. I think this deal is I would say is a yes. And this is the game section only, right? Then there's real estate, which goes back to something I've been working on myself, and I'm going to do one of these. So be a part of it. Buy a piece of it. I spoke about this in yesterday's show. If you didn't see, equity. You can buy a piece of property or a company that buys property, right? So look at this. This is, let's just go into this and see. They already got 1,000 investors here. So we want to create 100K millionaires. All right, let's watch that. That sounds interesting.
I'm fellow Michael. I'm the founder of Nice Company. Come join me in my mission to wipe out the racial and gender wealth gaps by owning buildings just like this one.
The biggest people of influence and power and wealth were people in the real estate industry. You just look at their Forbes list of billionaires, how many have made just a fortune just from real estate. So I basically made it a goal for myself to get into that game.
New data showing that economic growth is not helping the inequality gap.
Grown. The top 1% have doubled their wealth over the past decade by more than $17 trillion.
The wealth gap is really, the millennial wealth gap is basically a description of some terrible economic conditions that millennials and Gen Z have inherited in today's.
So in the interest of time, if you're interested, you can go to the Republic site and look this deal up. But I agree with him, and it's the same reason I'm doing it. I'm thinking the exact same way, but I guess he's thinking about buying residential, and I'm thinking about buying vacation rentals, because I think vacation rentals, again, you think about the wholesale resale idea. Wholesale is when you rent an apartment. I'm saying, look, I'm going to rent it for the whole year, so give me a discount per day, right? Versus if I'm going on vacation for 3 days, I will be willing to pay a lot more for those 3 days to be in the apartment, right? So I think vacation renting is much more profitable. There are other problems to it, but I have those solved. So that's what I'm doing. But I understand. So the type of real estate he's doing is co-living. Total capitalization, 1.5 million. Already he's raised 200,000, almost 300,000. Anticipated hold period, 7 to 10 years. Targeted IRR, so here it is. Internal rate of return is the annual rate of growth and investment is expected to generate. So 12 to 15% a year is really good. You know, I mean, I'm getting into real estate and understanding how all these numbers work. That is a pretty good number. Like, I don't know many investments I've seen in the real estate game that have that level of return. So crowd IPA, so type of security. So when you see type of security, before you saw crowd safe, that's a safe note, which means you're buying the equity. You're buying a certain amount of stock based on a future value. Crowd, I never even saw this. Crowd IPA, interest purchase agreement. A simple agreement to acquire membership units of a limit liability company. So what I think this means is you're buying a certain amount of shares in an LLC, and I don't think it matters the value. I got to research that. I've never seen this crowd IPA. But this is where You got to do your research. I'm going to do my research because I'm going to create one of these. But this is a huge opportunity. Like I can't even tell you how big of an opportunity this whole thing is. And I'm just on Republic. I haven't even gone to another one yet. Like, what's another one I can go to? Let me just finish with Republic before I go. Because Republic also has startups, which I didn't even get to. So, okay. See, Republic has ones that are on fire. So, right here, Juked is on fire. Let's see what Juked is. Juked has raised $400,000 from 700 investors. So, that means people are giving him a good amount of money. Let's see what Juke does. I'm going to make the screen bigger. Oh, it is bigger. All right. Juked. Let's watch the video.
Hey everyone, my name is Ben Goldhaber and I'm the co-founder and CEO of Juke.gg, the new home for esports fans. My co-founder Chris and I have been working in the esports space for a decade each. I was on the co-founding team at Twitch in 2011.
Oh, wow.
And Chris has created some of the most popular independent talk shows, podcasts, and apps in esports.
You see, they know that you start out with the team, right? Like I just showed you in this chart, the first thing people look at is the team. So he just said he was a founding person at Twitch. That's pretty big.
You probably already know that esports is among the fastest growing segments in media and entertainment today, and is expected to reach nearly 500 million viewers in 2020. But while esports has grown exponentially over the last 10 years, it also suffers from a serious problem in fragmentation. In traditional sports, the path to becoming a fan is simple. You have local team infrastructure, TV channels dedicated to 24/7 coverage, and apps and services like Bleacher Report and ESPN. In esports, however, the path to becoming a fan is far less clear. The only good way to stay in the know about what's happening in esports is to crawl across dozens of community sites, social media channels, and streaming platforms on nearly a daily basis, and this makes following your favorite esports players and teams a challenge. For the uninitiated, it's downright broken. We're dedicated to fixing this problem. On Juked, we make it easy to enjoy esports by centralizing all of the most important information and content into a single destination. We feature match results, tournament broadcasts, stats, scores, player profiles, the latest news, and more for over 35 esports games, making Juke the most robust media site in all of esports. And this is just the beginning. Over the next 12 months, we're rolling out game-changing new features and products, including social functionality, mobile apps on iOS and Android, original content, and so much more. Since we launched in September of 2019, our user base has grown by 74% month-over-month on average to over 50,000 monthly active users.
So, wow. Basically, that sounded kind of crazy. To me, what I see is they're pretty much going after Twitch and they're trying to solve the problems that Twitch has. But it seemed pretty good, and it's a startup. It's not a game. So how are they doing it? They're doing, again, a crowd safe note. You can invest as little as $100. If you believe in esports and these e-leagues, to me, this is a good investment, because if he's right on what he's doing, him and his team are doing, this thing could become huge, right? It could become a big deal. And I already saw with some of the features he was showing, because I've been trying to understand more about this gaming opportunity myself. Again, now you got to go through, and again, I'll put the link in the description and the comment. You can look as an investor would look and come up with your own idea and say, you know what? I think this is a good company to invest in. And the beauty of it is you don't got to invest $1,000, $2,000, $5,000, $10,000, $25,000. You can invest $100. And right now, there's a lot of people right now investing in stocks, right? And hoping to hit it big. But, if you're going to take risks, the earlier you take the risk, the more the reward, right? So if you're going to risk right now $100, if you feel like you want to make sure that $100 is safe and grows, you can put it into Microsoft, right? Apple, Facebook, whatever. But if you're saying, hey, for every 100, I'm going to put 100 in something that's risky, remember the 50-50 thing? and you look for stuff like that that you know about and you're interested in, you know the industry. I just showed you real estate. I just showed you gaming. I just showed you that was a technology platform. It wasn't a game. So, you know, that if you feel like that's the type of site that you would use, then you should go for it. So today I think I'm just stick with Republic. I'm going to show you another one. The last one I'll show you is Alpha Flow, real estate investing with the institutional approach. This has raised $600,000. It's 51 days left. $40 million cap valuation. That to me is super duper high. I'm already skeptical just by seeing that number. 8.5 million. I can see how the Juked platform could be worth that. It might be a little high. I got to see if the site exists. I will have to do more research, right? 8.5 million means you have something substantial already. You're going. You have users. You know, you're in the upper area of the chart, and I mean no, you're in the bottom to middle area of the chart. Really, that chart when you get to the top areas, you're talking about companies worth hundreds of millions of dollars. So, all right. So if we look at Jukes is worth 8.5 million valuation, and this is worth 40 million. So I just want to see why they believe they're worth $40 million.
Today, AlphaFlow is the leading institutional platform for investing online in real estate debt. Using our technology, we're connecting the world's capital markets and local real estate lenders. Together, we're helping more people get into homes and improving communities around the country. On one side of our business, we're focused on the $75 billion residential private lending market. These lenders are where real estate developers go to fund their projects. The industry is dominated by small local firms who know their neighborhoods and they move fast with their borrowers.
All right, so I understand now why they think they're worth that much. And again, it's why they think they're worth that much and if they can convince you if they're worth that much. So the reason why is because real estate purchases are very, very high ticket items, right? So a company like this will take probably 3% of every deal, but they could be doing billions of dollars worth of deals, right? A home on the low end now is about, let's say, even if you're in like Texas, $250,000, right? Let's say you do 25 homes a month, you're talking about a lot of money, right? So if they're the leading thing that does this, they're making pretty substantial amount of money probably already. So I'm going to quickly, because we got like 2 minutes left, to look through. Okay, it's another safe note. Alpha Flow. Let me show you what I'm looking at. All right, so it's an online platform where you can get deals, buy and sell loans with simplicity. So a loan is the full amount of that home value, right? So if you buy a home for $1 million, you know, you're buying $1 million loan. Let's say it's a 3% on $1 million. That adds up quick. So executing $1 billion plus into real estate bridge loans. So right there, $1 billion. If you take 3% of $1 billion, you're talking about a lot of money. Lenders love our software. So they're already working with lenders. That's a big deal. They say they're the leading. So strong unit economics. This is a big, big thing you want to look at. Unit economics means how much does it cost to provide the service. So today, AlphaFlow earns approximately 1.75% in total of all loans. Remember I said 3? I was wrong, about half. It sells to clients. Clients pay AlphaFlow for a sale premium of 75 basis points for each loan. Example, $500,000 loan would be sold for $503,000. So basically, they make that $3,000 every time a $500,000 loan, and you're talking about billions of dollars. In addition, client pays AlphaFlow an ongoing 1% annualization fee on a monthly basis. Wow. So they continue to make money on the loan, the life of the loan? Whoa, that's crazy. That's pretty crazy. That's interesting. So all right, it's 8 o'clock. I just went through a few equity crowdfunding deals on one platform. There's 30 platforms. I'm gonna start trying to get people that make these deals, that are making these projects, on my show, because I definitely think if you start here and you start to understand and like a company, you can invest in it. Versus sometimes with startups that are not an equity crowdfunding, you could love the idea but technically can't invest in it because you're not one of the 1%ers that are accredited investors. So I think as an entrepreneur, if you're watching this, if you're an entrepreneur or an investor, it's good to understand what these people are doing. Because if you're an entrepreneur and want to do it, they'll explain how they're doing it. And if you're an investor and like it, you can invest in it. So that's what I'm going to start doing. I'm already reaching out to people, and now I'm going to reach out to these people who are on this show that I found and see if they want to come on the show and explain what they do to my audience. So again, thank you. If you watch this show, again, thank you. Please like and subscribe to the channel on YouTube. I'm trying to grow my YouTube. So please, if you're watching this, please go to the YouTube, like it, and subscribe to the channel, and hit the bell. The bell is probably the most important thing. So please do that. And thank you again. Thank you again for coming to the Entrepreneur Hour. And have a great day. Rest of your day. I guess since I'm doing this at night now, innovate every day. I guess think about how you're going to innovate tomorrow. Whoa, I just spilled some water on it. So thank you. Thank you again for coming by. And looking forward to keeping doing this and keeping educating the public on the opportunities that are available to them and all of us. Thank you. Have a great day. Rest of your day. Great night. Have a great night.